All right, so today I wanted to make a video on an ETF that I've never talked about. This is ULTY. It's one of the yield max ETFs. They do pay weekly. Full disclosure, I do not own it, and I'm going to get into why. First things first, though, if you get value out of the video, as always, please like, subscribe, comment, check out the links below. So let's get right into this video because this one's going to be pretty short and sweet, but let's get right into it. ULTY actively managed ETF seeks to generate weekly income from a portfolio of covered call strategies, each on a US listed security. Um, Again, high degree of risk. Price returns are capped. Uh, is subject to potential losses if the shares of the underlying securities decrease in value, which may not be offset by the income received. So they don't really say much on here, to be honest. They go over the distribution schedule. They give its actually the one thing to point out here is that its expense ratio is 130 basis points, which is higher than almost all. In fact, this is the highest management fee I've seen from any of the yield max funds or any of the funds that I own. So number one, that's a big bummer. Um, about 3.3 billion in assets under management. Other than MSTY, I believe this is the largest of the yield max funds. And that's the reason that I want to talk about this because it's a very big, it's a very popular fund. I have no idea why, but again, I'm going to get into it. And again, if we look at its top holdings, Affirm, AppLovin, which just got into the S&P, um, yeah, so I mean, a lot of these holdings. Let's check the holdings on Stock Unlock here, just because they'll break it down a little bit better, I think. So again, if we look at its stocks, so again, it has First American government obligations. So I think is that a bond? I don't even know. Ionic, Rocket Lab, Oklo, Upstart, Robinhood, Rigneti Computing, never heard of them. Nebius Group, never heard of them. Coinbase, AST Space Mobile, Reddit, Unity Software, NewScale, Affirm. So again, these are a lot of stocks that are based solely on hype. A lot of these are, again, they're high flyers. They're stocks that, and let's be frank, probably 90% of these stocks you couldn't pay me to own them. So that's the first red flag. In that, whenever you're looking at a covered call fund, you want to check the underlying stock or index that it's trading. Because if the index or the stock is garbage, chances are the returns you're going to get are garbage. So let's check it out here. So the first thing that people are probably wondering is what's the dividend? And I did do the math, and they pay about 10 cents a share on average. And if you were to add that up and to do that over a year, based on its current share price, it's a little less than 100%. Now people hear that and they're probably like, that's amazing. And that's probably why people like this so much. But the first thing you realize here, and the most important thing, is that if you look at their returns, so this fund came out in March of 2024, and the shares are down 71%, right? The share price is down 71% in not even 2 years. If you look at its returns, even when you account for dividends, it's 14%. Now, again, technically it's positive. You got me there, but it's still less than half of what the S&P has returned. So again, it just boggles my mind that people actually own this fund. Let's compare it because again, I think comparing it is the big thing here. I mean, let's even check year to date just out of curiosity here, just to see if anything actually changes there. So if we go year to date, oh, it's actually not quite as bad. It's still underperformed the S&P, although just barely, about 10% versus just over 11%. Let's compare it even from when the market kind of crashed, which was early April, April 1st. Okay, so it is beating the S&P then. It is beating the S&P since then. So You can give it that. But again, it's still in my mind is not even close to enough to make up the difference. So let's compare it to a couple other funds that I kind of like. I wouldn't say I'm head over heels for either of these. I do own them, so I do like them a little bit, but I'm not necessarily head over heels. So MSTY, obviously the largest of the yield max funds. Again, the expense ratio is 30 basis points less, which again, that's not like it's a gigantic difference, but it is a difference. If we look at the dividend, uh, MSTY has paid a larger dividend, at least trailing 12 months, so it doesn't even have it there. MSTY pays monthly as opposed to weekly, but again, when you're looking at that big of a difference, frankly, it doesn't matter. If there's very little difference, yeah, obviously I'm going to take the weekly over the monthly, but when there's a clear difference, monthly is still going to be better. So let's compare it from March of 2024 because that's when that fund came out. So MSTY gets crapped on a lot because of its negative share price returns, which it does deserve it, at least to an extent. But if you look at MSTY, when you account for dividends, is up 153% versus the S&P is about 29. Now, again, the price returns are about 41%, which obviously is concerning. That's why I trimmed my position recently. But still, uh, it has absolutely destroyed the S&P when you account for dividends. ULTY has not. Right? Let's go year to date because I think it's a lot worse year to date. So year to date, close enough. So year to date, actually all of MSTY's negative price returns have came year to date. It has underperformed the S&P, although barely again. If we go from, let's check it from April, early April, we're basically, it actually has slightly outperformed the S&P. So in all scheme of things, MSTY has clearly outperformed ULTY. Now let's compare it to YBTC. Now again, I choose these two specifically because these are the only other two that I own that are comparable that have been around for at least as long. YBTC, if we go from March of 2024 here, so YBTC has performed much better in both aspects. Negative 20% price returns, so that's a bummer. But again, it's nowhere near either of the other ones. The price returns is about double the S&P, right? Not as good as MSTY, but still way better than ULTY, and the price returns are better as well. If we go year to date, year to date, it again more than double the S&P. So again, it's easily beating both of the other ones there. And then if we go from, let's go from early April as well, also easily beating the S&P. So of these funds, I think it's fair to say YBTC has performed the best. Uh, Mainly, I would say because it's more stable. You could argue that the one caveat I would throw out is that if we see a very large upswing in MSTR's share price, MSTY will be the better bet because even if Bitcoin goes up significantly, chances are MSTY goes up significantly, and if that happens, MSTY probably will outperform. So in a neutral to bearish Bitcoin market, YBTC is going to be the better choice. In a massive bull trend upswing, God candle, MSTY is going to outperform. At the end of the day, if my concern is safety, I'm choosing YBTC. If my concern is maximizing upside, I'm probably going to choose MSTY. But the one caveat there is ULTY doesn't even come into the conversation. Like it's not better. It's not better than either of these two funds in any way, shape, or form. Like it doesn't matter how you cut it. So um, that's what I wanted to talk about here, and I wanted to make this because number one, I believe someone asked about it recently, and like I said, I believe it is the second largest of the yield max funds. And I mean, frankly, a $3 billion market cap on a covered call fund is pretty big. Like that's pretty big. It's probably, I mean, that might even be top 10 in like all covered call ETFs. Like, I would have to, look that up and get more information. But if I was just guessing off the top of my head, that's what I would guess. So that is the video for today. Like I mentioned at the start of the video, if you got value, please like, subscribe, comment, check out those links below, and stay tuned for more.